Good morning, my name's Ryan Littlestone from forexflow.live. Last week I was lamenting how quiet things were and the fact that markets were in very tight ranges, and come the end of the week we're in a whole different space of a whole different world compared to that after the FOMC. Big moves in bond yields, as I'm sure you already know, and some big moves in dollar pairs around the FX sphere, if you like. First pair we're going to look at today is pound versus the dollar cable, looking at a daily chart on this one. And we were stuck in that sort of 142, 140 range. That got blown out the water, as I say. So what we're doing now is we're taking a wider view of things, see where the next bigger levels are, because all the smaller intraday levels, short-term levels have just been blown out the water in these big moves. One of these levels I've had down in towards 138, 138.45.50, which is marking the low at the moment. But looking further down, once we get into under 138, if we get under 138, down towards 137, 60, 70, and even down towards a big figure at 137, we start hitting some of these bigger, longer term levels. These are the types of levels I'm looking at to potentially look for a fade move or to get back into longs to see on a technical basis whether this move is overdone and we're going to see a bounce come in again. Just below 137, we've got the much bigger 135 level, probably a bit out of reach for these moves, but again, something to keep an eye on and looking at the wider ranges, plotting the bigger levels, just in case we get another knock-on move at the moment. Next chart we're going to look at quickly is euro dollar. Again, another swift move, knocking out the levels. We were looking at the sort of 122 to 120, 121 area, ping-ponging in between that for quite a while. Now we've seen another big breakdown below. It carved through the levels through 120, through 119, pulling up just shy of a really big historical level that I have at 118.30. You can see this goes back all the way to 2018, this level. It goes back even further than that if you expand your charts. But we've got a minor support here just ahead of it, around sort of 118.60, 70. And again, this is one of those levels that it's potentially stopping above this big 18.30 level. So what I'm looking at here is, again, to see if we're going to push up or whether it's the end of this move or whether it's just a minor pause. At the moment today, we've had a bounce from sort of the 50 area, but it's not gone too far. We've got up to 119. It hasn't really got above 119. 119, sort of 25, 30-ish is the next big level above there. If we get over that, then the pressure starts to ease. But if we stay in this pretty tight range, then potentially we're going to see another leg lower. But as I've been saying, bond yields are the thing to follow. We had a bit of a blowout in 10s this morning, down to sort of 1.35%. From around 140, but subsequently to that, we've seen a very strong move higher. So it could be that we've had a last sort of little blowout in yields there, and we're going to see some stabilization coming in. But again, looking at the wider level. So now I'm going to be looking at this 118.30, this 118.50 at the moment, all the way up 119s, 120. If we start to see 120 becoming resistance and strong resistance, then potentially we're going to hit a smaller range and maybe go sideways a bit more until we get the after effects sorting themselves out from this. Last pair I'm going to look at quickly is Aussie dollar versus US dollar. Once again, another big break. We had this 77 level, 76, 70, 80 area. That got blown through again, down through the fibs, all the way through 75s. We're seeing it holding just below 75, edging back above. Again, still not looking like it's putting on a real decent bounce. The level I'm looking at down here is a big historical level down at 74s. Maybe a bit wider, maybe looking at 73.80, 74.20, that sort of area. But again, it goes all the way back. This one goes all the way back to the early 2000s if you take a look at your really long-term charts. But again, this is a level I'm going to be keeping an eye on. If we get down there, maybe to start building longs, because I believe that, like the Fed, the RBA are going to be forced to hike earlier than they expect. Lots going on. That's it for me. Wish you luck this week.